Well, as appetite for investments in the continent continues to grow, the JSE implemented a new Africa strategy, migrating the companies listed on its Africa board to its main board this year and diversifying the instrument range it offers to African investors. Joining us to discuss this and more on the landscape for African exchanges right now, Siobhan Cleary, Director of Strategy and Public Policy at the JSE. Thank you so much for joining us, Siobhan. So let's take it back to 2009. Africa board launched, and pretty much 2012 it came to an end. It has been seen as a failure, some saying it came before its time. You've said that it was the lack of visibility for companies on the Africa board, the fact that they weren't listed on the main board. So what lessons have you learned from the failure of the Africa board?
Well, so thanks for having me first. What I'd like to say first is that one of the things we have learned is that companies who list outside their home market want to be profiled with other companies in similar industries. So banks that list outside, for example, Kenya or Nigeria, they don't want to be in their own little category. They want to be alongside the major banks that you see in South Africa. So that was one of the reasons really for moving those companies from the Africa board onto the main board or Altex or wherever else they belong on the JSE. One of the other things we've learned is that investors are capable of sorting through the list of companies to find the African investments, because African investments aren't just the companies that come from Africa. They're the South African companies that get a significant proportion of their revenue from Africa. African investments about the African growth story and the companies that can give you access to that.
Yeah, exactly. And I mean, just looking at the listed companies you have previously stating, 12 listed African companies, exactly. And now you've chosen to move away from distinguishing African companies from non-African companies, whatever that may mean. So is that really part of the strategy moving forward?
Well, so the strategy moving forward, we remain convinced that what we want to do is be the premier destination for investors who are looking for exposure to the African growth story. And for those entities looking to raise capital outside their home markets for whatever reason, because they've outgrown it, because they can't get the capital there, we want to be the venue they go to. We think we're beyond the time where people need to go to London or to the US in order to raise that capital.
So when you take that into context of sub-Saharan Africa, where you're seeing growth rates in countries like Nigeria, like Kenya, and of course, Rwanda, across the board, growth rates beyond South Africa, and developing emerging markets, stock markets there, of course, and modernizing. How do you remain relevant? How do you stay the premier destination for capital raising on the continent when we've got exchanges, and of course Nigeria stands out, which are modernizing and developing quite quickly?
Well, we think the things that are happening in the other exchanges on the continent are fantastic. It just makes people from around the world more interested in investing in Africa, because they can see that the right kinds of corporate governance, oversight, regulation, etc. is taking place. But at the same time, those markets are still relatively constrained by the size of their economies. And while they're growing rapidly, they're still small by comparison to South Africa. And the international investment flows that we get into South Africa by comparison to the rest of the continent are still significant. So we think there's still an opportunity for South Africa to play that role for a while to come.
Are governments a bit of a hindrance right now for the JSE when it comes to other African governments? Because many of them saying they want local companies to list on the exchange if they are going to list. They're saying to the public companies, we want to privatize you, and we want you to list on the local exchange. Surely that would be a hindrance to the JSE.
So that's a hindrance, I guess, initially. But the reality is, firstly, you can understand that. You want your domestic investors to be able to participate in the opportunities that come with a privatization or a listing of a large company. But at the same time, most governments we have dealt with seem to recognize that at a certain point in time, companies need to expand. They move into new markets, and when they do that, they shift their listings. Don't necessarily move the listing, but get a new listing somewhere else.
You've talked about depository receipts and that being part of the new Africa strategy, because of course a company would not need to list on the JSE, but it would allow people to get exposure to them in South African rands if they had a DR here, and then of course the benefit to the company who doesn't necessarily have to list. So talk to us about that strategy, and then we'll get into whether there are any DRs planned in the future. So
the DR is a very important part of the strategy we're looking at. We're in conversation with a number of the banks who deal with DRs and deal with companies who issue DRs, and we we're working on that angle, and the conversations are going well in that regard. On the other side, though, one of the things we need to do is we need to speak to government locally about exchange control dispensation, because at the moment DRs would still fall into the foreign currency allowance, or the foreign allowance of institutional investors in South Africa, and obviously that constrains the investment opportunity locally.
So it would be seen pretty much as an offshore investment from the institutional perspective. So that, of course, a conversation, as you say, need to have with government. When it comes to exchange collaboration, talk to us about that, because you know the JSE very visibly here in South Africa hosting a number of seminars where you've got exchange CEOs from around the continent coming here. You're offering your expertise and skills. What is the kind of view on exchange collaboration right now?
So we remain very enthusiastic about collaborating, but recognize that exchanges have their own things. You mentioned Nigeria, a lot of focus on sorting out their regulatory situation in their home market. Kenya, likewise, very focused on their demutualization and the possible listing of the exchange. At the same time, though, we're having conversations with a number of exchanges about kind of cross-listing indices and ETFs. So, for example, possibly an ETF on the Nigerian top 10 or top 15 companies being listed here, and then the South African ETF being listed in Nigeria. So those kinds of conversations continue.
And how does that benefit the JSE? You know, what are the economics behind it? Because apart from, you know, offering your help, what does it mean to the JSE from a profitability perspective?
Well, the more opportunities there are for us to collaborate with other exchanges, the more opportunities there are to get new products onto the JSE that are attractive to our investors, which obviously brings more trade onto the JSE. And also, if exchanges realize we're not out to cannibalize what they're doing, then they become less sort of possessive about their own companies and look at new opportunities in that regard.
Yeah.